Hello everybody, welcome to your market report. My name is Christian Charlo. Today we're Thursday, July 4th. For the American people who are watching me today, happy Independence Day. So today folks, I want to talk about a situation of the market. Because what is the situation? Right now, markets are staying stuck within their sideways formation. You see here the sideways formation for the NASDAQ, same sideways formation for the TSX, for the Dow Jones and same sideways formation for the TSX. So what are the strategies that we could adopt? Well, so far we have as many chances to go up than to go down. But what are the factors that will play on the upside? First of all, there is the ECB and the Central Bank of England that actually are continuing to pursue the loose monetary policies. Good news. Tomorrow, there's the ADP employment report. If ever this report is positive, good news. Next week, the earnings seasons will start. And if ever we have a strong earnings seasons, then that will create definitely a buyer's momentum. So we might on the NASDAQ reverse the downward trend, right? And on the Dow Jones, same scenario, and also the same thing on the TSX. But if ever the optimistic scenario we just mentioned doesn't materialize, well, we're gonna have a clear bearish cycle on the NASDAQ. And that's why I'm going to show you today a list of some stocks that are going to publish their earnings next week, and that on those stocks you should actually put, first of all, your buying point, but also your exit point. It's really important because we have actually as much chances to go up and to go down because markets are staying within a sideways formation. So let's start. First of all, the first stock I want to start with is Pricesmart. A clear upward trend. So your entry point should be on the break of that resistance at 90.11 and your exit point on the reversal of that upward trend, which will also coincide with the break of that support at 85.95. Vox International. I love the upward trend on that stock. If ever the stock can break that 12.55, 12.51 resistance, I'll be willing to get in, and I put my stop loss at 11.82, which will be the break of that support and also the reversal of the upward trend. Semel Corporation. Next week they will publish their earnings, but what we liked about that stock is the heightened volatility, right? So what I would do on that stock, instead of putting a buy order here and putting my stop loss on the break of that support, I would just buy. I'll be willing to open some positions right now on Semel Corporation, but put a trailing stop to it. So I put a trailing stop, let's say of 7%, because that's a stock that's so volatile. So just in case you don't have time to put your stop loss, you can buy it, put a trailing stop, let's say 7% on half of your positions, so at least you minimize your losses. So that's a strategy that you could favor on Semel Corporation. And if you're willing to do buy order and put your stop loss, well, buy order is at 184 and stop loss is at 140. Wells Fargo. Actually, that's a stock that I wanted to mention because next week they will publish their earnings, but also last week or 2 weeks ago, the FDIC, Federal Deposit Insurance, actually proposed a bill that will require big banks to actually have a 6% capital requirement. So Wells Fargo was the only big bank which, if ever this bill became law, was able to meet that 6% capital requirement. So that's why Wells Fargo stayed really strong. So the entry point on Wells Fargo is at 41.79 and the exit strategy is at 39.37. JPMorgan didn't, if ever the bill became law, JPMorgan would have not met the 6% capital requirement. But look at JPMorgan technical pattern though. It's clearly staying, yes, within an important triangle formation, but the stock is still keeping its upward trend though. So two strategies you could favor. Either you could get in right now on JPMorgan and you're willing to tolerate until the stock tests that upward trend around 50.37 and you just put your stop loss at 48.81. Or you could say, you know what, I'll be more patient. I'll wait for a clear reversal of that downward trend and you get in on JPMorgan whenever the stock breaks that 53.49 old support, which will coincide with the reversal of that downward trend to get in. There's also Fifth Third Bancorp because I wanted to, it's next week, not next week, but on July 18 that they're going to publish their earnings. So Fifth Third Bancorp because it was a stock that was not going to be impacted by the FDIC bill if it became law, because it's a medium the small cap bank. And the Fifth Third Bank Corp actually, if ever it breaks that resistance at 1862, that would be a great opportunity to get in on that stock, and you have to put your stop loss at 1750. Northern Trust, same scenario, small to medium cap banks, 59.17, exit strategy 56.44 on the break of that support. And Verizon Communication, look at that, a nice upward trend, and you just have to get in at 51.79, stop loss 48.77. Polaris Industries, 97.10, that's your entry point, and 91.44, that's your exit strategy. So this is the list, folks. All the stocks that are not highlighted with an I or with an S are actually stocks that will publish their earnings next week. But all the ones that are highlighted with an I and an S are the ones that will publish their earnings on July 18. So this is important. Those lists of stocks you should put on your shopping cart. If we have an optimistic scenario, your buy order will be executed, and you will be able to actually perform nicely on those stocks if ever the optimistic scenario confirms itself. But if ever the pessimistic scenario materializes itself, well, at least knowing that you took some protection by either putting a trailing stop or either by putting a stop loss, well, at least you'll be able to minimize your losses and protect your investment. So that's it, folks. This is Christian Charlo from MarketGurus.tv that you can have access for free for 10 days just by clicking at the link below. We're going to make a follow-up on MarketGurus.tv on all those stocks and many more live, so you could get access to that for free. And see you next week for your market report. I wish you a good trading.